Do you know Bill Gates, the genius founder of Microsoft? Ever been curious as to what stocks is he interested in? So today, we will be looking at 5 stocks Bill Gates purchased during the market recession for you to consider if you should invest in them too. Welcome to Prima Invest, where we will give you information relating to all things investing. Let's get to the video. Enjoy. Whatever your opinion of Bill Gates may be, there is one thing you cannot dispute: his intelligence. He is competent in both business and investing. When he was younger, he became friends with Warren Buffett and adopted some of Buffett's stock market investment strategies, purchasing profitable companies at bargain prices. Over the past year, Gates has seized the opportunity presented by the stock market's decline to buy more stocks. Fortunately, he is legally compelled to reveal the stocks that he is purchasing for his Bill and Melinda Gates Foundation Trust, even though we are unable to view the personal stock that he is purchasing for himself. He had purchased 13 equities with the trust over the past year, but only 5 of those stocks represented a sizable portion of his portfolio. Microsoft. The fact that his greatest stock was his own business, which he founded many years ago, and that he is still investing in it now, really caught my attention. He continues to purchase Microsoft shares, the same stock that he sold during the late 1990s tech bubble to diversify his portfolio and buy other stocks. Bill Gates is once again investing in that stock despite Microsoft's stock price having increased by 239,000%. Microsoft, which is currently the second largest firm in the world and has a market value of $1.8 trillion, has suffered this year along with all other stocks. Microsoft stock has dropped to $240 from $336. It pays a dividend of 1.1%, and it has a PE ratio that is reasonably high at 25, but its fundamentals show a different picture. Whether there is or is not a pandemic, both revenue and earnings have been steadily rising each year. It appears this business can do no wrong, and I think that is a major factor in the Gates Trust decision to purchase shares even though the price is so low. The fundamentals are still strong. So are you interested in investing in the second largest company of all time? Comment down your thoughts below. Canadian National Railway. The Canadian National Railway was his second largest acquisition. He has had this stock for a long time, but he keeps adding to it because it has been around for so long, since 1919, and because its business model was purely sustainable, moving commodities across North America. Many people think of this company as an old-school, classic value investment. Goods need to keep the economy alive as well as products for industries with little competition. It seems unlikely that CN will go out of business anytime soon, since you can't just go and install 20,000 miles of track over 3 coastlines like they already have. As Warren Buffett would say, it is a magnificent moat. The company presently trades for $160 per share, has a PE ratio somewhat lower than Microsoft's at 22, and a slightly higher dividend yield of 1.8%. However, when comparing revenue and profitability, the situation is not as good as it was for Microsoft. They have only been modestly increasing revenue and retaining their earnings. Berkshire Hathaway. Since the year 1991, when they first met, Gates and Buffett have been close friends for a very long time. Do you recall the renowned tale of how the two met? Where they couldn't stop discussing business and both at random noted that focus was the key to their success. Microsoft, the second largest corporation in the world by market valuation, was founded by Gates. Berkshire Hathaway. It was his third largest purchase of the year, accounting for 9.3% of his total portfolio, and it now represents his second largest holding, totaling 23.3%. It was wise of Gates to purchase this stock years ago, and he is continuing to do so today. The intriguing thing about Berkshire is that during the past year, its stock price has not decreased. Its share price was $299 last year, and is now selling for $309. I suppose that when the market crashes, investing in stocks with reliable, strong business concepts does well, because Warren Buffett is somewhat opposed to dividend payments. Berkshire does not make them. They are a sizable firm with a market worth of $680 billion and a forward PE of 21. So overall, it is a good quality company that is still selling for a fair enough price for Gates to keep buying. Waste Management. Another stock that Gates simply enjoys owning is Waste Management, which comes up at number 4. Waste Management disposes of waste. Thus, it's not a pretty business. In fact, one could say that without it, the country would be ugly. This North American corporation has 346 transfer stations, 293 active landfill disposal sites, and 146 recycling facilities available to its almost 21 million consumers in the USA and Canada. It's an excellent and necessary business that both Americans and Canadians need. This company won't go out of business anytime soon, since even during a recession, individuals still need to have their waste handled. Waste Management is another stock that has held up well during the market crash. It is currently trading at nearly the same level as it did a year ago, despite having a rather high PE ratio of 29 for a lower growth company with such stability. Additionally, it pays a little dividend, much like most Gates stocks. Hey, if you enjoy this type of content, do give us a like and subscribe. Deere & Co. Deere & Company, which was worth 3% of his whole portfolio, was the last stock that Gates purchased that had any real weight in his portfolio. I'll be completely honest, it's a dull corporation with a reliable and simple business plan. They produce useful outdoor equipment such as tractors, lawn care, construction, forestry, and agricultural tools. In contrast to the market, the stock's price has increased over the past year, rising from $342 to $428 at the moment. In conclusion, I have no idea how Gates discovered these firms that performed so well in 2022, but most of his investments have kept their value, except Microsoft, which experienced a sharp increase. Therefore, whether Larson is doing much of the investment or Gates is in charge of the trust, Gates' strategy is to invest in conservative companies like Microsoft, Berkshire, and Canadian National Railway because they have all been there for a while. They have established products and target markets for their sales, have tested business methods, and won't go out of business anytime soon. Recession or no recession. If he will be able to sleep well at night and not worry about the economy, since he owns high-caliber firms, it is a wise investment. It may not be an exciting investment due to them being conservative stocks, but one thing is for sure, you can never go wrong with a tried and tested company. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel. And as always, have a good one.